Greetings traders, Jason here with SwingHigh.com. This is your weekend review for the week of November 2nd through the 6th. Real quick here, I want to show you what happened on Friday. The employment situation came out much worse than expected. The unemployment rate is now at 10.2% officially. Keep in mind that that's more like 17% in real terms, which they failed to report that for some reason. Makes me a little skeptical. Anyway, Friday, for my halftime report, we were sitting right around the 106 area. I said it was a good day to sit out, and indeed it was. Other than this big spike, this huge swing we had here, which looks huge on a 5-minute chart, but really wasn't that big. It was a whole point on the SPY. After that, we just kind of chopped sideways near our high, making an ascending triangle type formation, if you will. Let's see if I can draw that in here for you. You see that ascending triangle formation? Those are normally bullish, which wouldn't surprise me if we continued this uptrend a little bit longer. I'll talk about that in a second. Let's look at the market internals for Friday real quick. The VIX bled out nicely, down almost 5% under the 25 mark. The TRIN, the TRIN was actually quite bearish for most of the day, so that's a little concerning for the bulls. And the tick spent most of the day above zero, mostly choppy sideways. Both the tick and the trend weren't very extreme, they were kind of neutral, so that explains the choppy action, or corroborates it at least. So that's for Friday's action. Let's look at the longer term, the daily chart of SPY, which is the S&P 500 ETF. We do have a lower swing high, or a higher swing low, excuse me, I got that completely backwards. We came down and made a higher swing low from this swing low here, and made a nice up leg here into resistance. So far everything behaved pretty much perfectly, and I want to take note at the volume. As we were dropping, the volume was rising. Notice that. And now as we were rising for this up leg, the volume was dropping. Volume is a very, well, it's a very important indicator. Not three varies, but one vary. Volume definitely tells how the market sentiment reads. And as you can see, the bigger bars here are red, meaning the market's selling off much harder than it's going up. That to me says that there's a lot of conviction to the downside. A lot more conviction to the downside than there is conviction to the upside. So here we are on the daily chart of SPY, and we almost have a head and shoulders type formation here. I do expect us to slow down and we have some major resistance. This big red line from the monthly, 108 from our other swing high back here, and if we do come up here, tag 108 and drop, that'll be the beginning of a head and shoulders formation. At that point, we would have to break this neckline from this point to these points. If we break below that neckline, it's game on for the bears. It's going to be a big downtrend. Let's look at the weekly and monthly real quick. The weekly is running into resistance as well. The monthly is, let's see this, right below that big red resistance line. So let's see how much we can hold that. The Russells on the daily showing some relative weakness as they didn't pop nearly as hard as the SPY, and this double top formation could continue to be confirmed if we make a lower swing high here. So in general, longer term, things are looking bearish. This up leg is just that. It's a bear pullback. It is an up leg. I do expect us to slow down, lose momentum, and roll back over. So we'll see what happens this week. Keep in touch. Check back at SwingHigh.com. Talk to you later.